Hello, kind people of YouTube. I wasn't planning on making another video today, but I saw this article and I figured this is an ongoing discussion in the crypto world that I haven't really talked about in my videos yet, so why not read this article together and then in between and at the end I will give my opinion. Now this is relatively long and it gives a good introduction to the whole issue as well as presenting a few different viewpoints. And I think this is a very good article, which is why I picked it here. It's of course linked in the description, so make sure to give it a click, give them the ad revenue they deserve, and make sure you make sure you read the original article. But let us jump into it. Can crypto record a 10,000 times return and reach $200 trillion market cap? By Joseph Young on Cointelegraph. Last week, statements from Binance CEO Changpeng Zhao, I hope that is correct, aka CZ, and Ethereum co-creator Vitalik Buterin led the community to speculate on the possibility of the crypto market achieving 1,000 times return in value in the long term. On September 8th, Buterin stated with the awareness of cryptocurrencies by the general public and mainstream reaching a peak in late 2017, it is unrealistic for the valuation of the crypto market to increase by 1,000-fold from its current value at $200 billion. A 1,000-fold increase from 200 billion is 200 trillion, which is 70% of global wealth that includes gold, reserve currencies, and other traditional assets that are utilized as wealth management products. Now, I don't have a particular reason to doubt this number, but I would have liked to see a source here, because that would be roughly 300 trillion then, a bit less than that in the world. I don't think I've seen that particular estimate yet, so I would have liked to see a source who calculated this. The highest number that I'm personally aware of is an estimate by the CIA for 80 trillion, but that might not be including all of these types of assets. So that might be lower for that reason. Still, I would have liked to see a source here, but ultimately the argument here is that that's not all that important when you're talking about crypto, but we'll get to that in a moment. And here the quote: "The blockchain space is getting to the point where there's a ceiling in sight. If you talk to the average educated person at this point, they probably have heard of blockchain at least once. There isn't an opportunity for yet another 1,000 times growth in anything in the space anymore." And the next paragraph here, misreporting about Buterin's initial statement. By the way, if I mispronounce his name, I'm so sorry. As, I've heard it pronounced a bunch of different ways, so I'm pretty much just pronouncing it in the way that comes naturally to me as a German speaker now, which might not be the way that name is actually pronounced. So very sorry about that. Given the context and Buterin's statement on the growth of awareness of crypto, the claim of the Ethereum co-creator was quite straightforward. While it is possible that decentralized systems and applications, dApps, achieve a 1,000-fold growth in activity and user base, it is not realistic to expect the valuation of cryptocurrencies to surpass 200 trillion anytime soon. Here the principal part is the anytime soon, of course. However, sensationalized headlines and out-of-context social media posts misled many members of the cryptocurrency community to misunderstand Buterin's statement as a pessimistic take on the rate of growth of the cryptocurrency sector. As an increasing number of people began to question Buterin's motive in his rather simple statement, he released a follow-up explanation on social media, reaffirming that although he struggles to see the valuation of the crypto market achieving $200 trillion, exponential growth in the usage of dApps and blockchain protocols is possible. And this is what he said: "To be clear, I never said that there's no room for growth in the crypto ecosystem. I said there's no room for 1,000 times price increases. A 1,000 times price increase from today means 200 trillion in crypto, or an entire 70% of today's global wealth being in crypto." Oh, and I just realized here that 70% number is coming from Buterin. That's why it's probably not quoted here, because the authors of this article also don't know the source. And back to his quote: "What I actually said is that because large portions of the population have already heard of crypto, further growth of crypto in any sense must come from depth, i.e. actual usage, and not bringing in more attention." Now, I think that is a generally very sensible statement, and a lot of people really have taken him out of context here. He did say 1,000 time increases are very unlikely. Note that he didn't say impossible. He said he doesn't see the room for growth there, but saying you don't expect prices to go up 1,000 times doesn't mean you can't see them going up 50 or 100 times. Like, at no point Was he making a pessimistic statement about the future of crypto and about growth in the markets? He was just questioning this vision of the markets going up 1,000 times again, especially in a short time period. Because the last times we have seen the markets go up like crazy, it happened within a couple of years. Back to the article. The viewpoint of Buterin toward the long-term growth of the cryptocurrency market is sensible, as it would undoubtedly be difficult for cryptocurrencies to represent the vast majority of the world's wealth. And I think this is the crux, this is a very important part of the argument, because even if you do think it can reach those 200 trillion, and that is going by those definitions that of the total value in the world, by which that makes up about 70%, that would expect crypto taking over everything, like everything in the entire world. And there are arguments to be made for why we shouldn't apply the standard, and we'll get to them in a bit. But in general, if you're making that argument, if you're saying 1,000 times growth, you're essentially predicting a near future, because people aren't talking about 2100. People are talking about 2030 or something like that when they're saying these numbers. People aren't talking about in 3 generations. They mean in 10, 15, 20 years when they make these predictions. So you are essentially making the statement that within that time, crypto will be everything. Crypto will be dominant in every area. And that is a pretty big thing to anticipate. Anyways, back to the article. It would require banks operating the $30 trillion offshore banking industry and investors holding wealth in traditional stores of value such as gold to switch to cryptocurrencies as the primary store of value. That is the thing here, primary. It needs to overtake everything else for these numbers. Instead of expecting an unrealistic return, Buterin noted that it is important to focus on the growth of dApps and protocols to speed up the process of increasing the usage of blockchain-based systems and cryptocurrencies. Currently, most individuals in both developed cryptocurrency markets like the US and Japan and restricted markets like India and China are already aware of cryptocurrencies and blockchain protocols. The next phase in blockchain technology might require a shift in the trend from centralized platforms to decentralized alternatives, which could be difficult given the discrepancy in efficiency between centralized and decentralized services. Another very good argument here, I've been talking about adoption on the channel a lot, and I think one of the main things that needs to happen for consumer-faced crypto adoption. Now, banks and big tech corporations will adopt blockchain and crypto tokens one way or another. But for consumers to adopt systems that use blockchain technology, and that will mean a lot of money flowing through it, a lot of activity on the networks, we need to create dApps, we need to create systems that are more efficient, that people want to use over established services. We need apps that are appealing and easy to use. We need new technology that makes people want to use it over old technology. And so far, most dApps have not been successful at doing that at all. Now, that doesn't mean the potential isn't there. dApps are a very, very young market, and there's a lot of growth still, and we need a lot more money flowing in to fund development of really big projects. But it's something that needs to happen at some point if we want consumer-facing crypto, if we want mass adoption of crypto by just normal people and not by big corporations and investors only. And that is going to be something we need if we ever want to see $200 trillion. That is something we will absolutely need. Anyways, once again, back to the article. I wanted to read out the article and then talk about it a bit, but I'm just doing it in between. I think this is probably better. CZ believes 1,000 time increase is possible. The CEO of the world's largest cryptocurrency exchange, Binance, better known by the community as CZ, stated that a 1,000-fold return from the current valuation of the market is absolutely possible, offering an extremely optimistic prediction on the future price trend of the market. He stated that 200 trillion could seem unrealistically large if compared to the traditional financial market, but similar to comparing the taxi industry to the market size of Uber, CZ explained that it is not accurate to measure the potential of the crypto market based on the size of the traditional finance market. I see this argument. I think there's some value to it. I think the example of taxi versus Uber is not a very good example, because the amount of global transportation did remain the same. So people just made the wrong comparison. Like, you were able to apply a potential market to Uber, but people made the mistake of applying the taxi market, when what really happened is that people that otherwise wouldn't be using taxis started using Uber. But not for any new there wasn't any new transportation created. People just used it instead of public transport, instead of driving their own car, instead of walking. So there was a market you could have applied to evaluate Uber's potential. Just the mistake was to use the taxi industry. But what we're doing here is we are looking at the whole market of all money, all value in the world. But we are also making the mistake that we are ignoring things that aren't traditionally just value, that aren't traditionally just investments. But anyways, let's look at his statement here. I still disagree with this, this of course being Buterin's position. I will say crypto will absolutely grow 1,000 times and more. Just reaching USD market cap will give it close to 1,000 times. That's just one currency with severely restricted use case, and the derivatives market is so much bigger. Not sure where he gets his numbers from. You also can't use traditional market size to measure potential for new technologies or industries. If you used, and people have, taxi market size to estimate Uber's potential, you would be off by quite a bit. There is merit in his argument that the potential of cryptocurrencies cannot be measured based on the market size of the traditional finance market, but over the past year, the biggest companies in crypto, such as Coinbase, Gemini, and BitGo, have been working to establish custody solutions to bring in institutional investors into the space, while investors have been highly anticipating the debut of exchange-traded funds, ETFs, and all sorts of publicly tradable instruments around crypto. Hence, with the majority of investors in the crypto market anticipating an influx of investors from the traditional finance sector, to some extent, investors have to explore the finance market to measure the potential market size of crypto. Moreover, as Shapeshift CEO Eric Voorhees said, global finance is becoming further integrated with crypto finance, and as the cryptocurrency sector continues to create bridges connecting the two markets, both markets will continue to intertwine and affect one another positively or negatively. As CZ stated, it is also important to acknowledge that money is one application of blockchain technology that is best demonstrated by Bitcoin. Venture capital firms and prominent investors like Ben Horowitz generally consider blockchain technology and smart contract blockchain protocols like Ethereum as new global computing systems. Bitcoin, Ether, and other major cryptocurrencies that have started to be adopted as stores of value have alternative use cases. Ether operates as gas that fuels the Ethereum smart contract blockchain protocol, which, with sufficient scaling through the implementation of sharding and plasma, could compete against centralized web servers and computing platforms in the long term. The ability of blockchain technology to operate as a computing system on top of a form of money could add more value, and as CZ said, in the sense that blockchain technology is not limited to money, it can be argued that the comparison between crypto and the finance sector represents only one aspect of the market. Now, what we do need to keep in mind here is that the finance sector does also include, for instance, the stock value of major companies that are in other markets. So when we are talking about it being the next step in the internet or replacing traditional computing, we are taking into account the value of firms in those areas when we are looking at the financial market. Next paragraph. Earliest Coinbase investor sees explosive growth for crypto. Crypto. Gary Tan, a prominent venture capitalist and the earliest investor in Coinbase and Instacart, who has funded more than 100 startups worth $20 billion, said that it is possible for the crypto market to reach hundreds of trillions of dollars in market valuation. While a 1,000-fold return is difficult to imagine, Tan stated that the possibility of explosive growth in the cryptocurrency sector cannot be ruled out. He emphasized that the crypto market will not undergo the trend most speculators in the industry expect. He told Cointelegraph, "My general sense is that it is possible but unlikely to be 1,000-fold. Even if it did get there, you would be assuming securitization, I'm sorry, that is a tough word, using security tokens, which isn't exactly what speculators have in mind when they are hoping for more 1,000 times situations. They are generally thinking that their worthless altcoins will somehow be worth 1,000 times, and security tokens will merely represent ownership in real assets. It's a strange nuance, but one worth mentioning." Another really good point that is often ignored, even if we see the crypto market gain 1,000 times, that doesn't mean every currently existing coin will gain 1,000 times. A lot of these current projects, especially the ones outside like the top 20, those are mainly legitimate projects with good use cases. But there are a lot of coins that have questionable use and questionable value, and to expect them to go up 1,000 times is I would not be predicting that. Still, After 9 years, Tan stated that the cryptocurrency market is mostly dominated by retail investors and individual traders. A significant amount of capital is controlled by institutions, and the entrance of institutional investors, like pensions, endowments, and sovereign wealth funds, could very well lead to an explosive increase in the valuation of crypto. For institutional investors to commit to an asset, say Bitcoin, a specific type of infrastructure is required to facilitate the transfer of funds. Custody solutions in the crypto markets have not existed for more than 2 months, with the first trusted custodian solution released by Coinbase in July. Hence, it could take months to years for institutional investors to commit to the crypto market, but echoing the viewpoint of billionaire investor Mike Novogratz, Tan stated that once institutions find their way into crypto, the market will see a difference in terms of volume and value. As Novogratz previously said, and here's the quote, "I think if you start seeing institutional LPs, limited partnerships, like endowments, foundations, pension plans, and sovereign wealth funds put capital into cryptocurrencies, you will see a tipping point where a percentage of world wealth starts flowing in. We are at the very earliest stages of that." Novogratz talks about the hordes coming, and I think that is correct. Crypto is still extremely driven by retail investors, but it's staggering how much money is locked up in institutions. Now, this is something I 100% agree with. I'm not sure about the 1,000 times number. If we are going to reach that, I don't think it will be anytime soon. It might not even be in our lifetimes. But what I can fully agree with is that we are waiting for those hordes, and they are coming. And when that happens, if the crypto markets don't increase by at least tenfold, I would be absolutely shocked. Probably more than tenfold, but it obviously depends on how large the markets are by then. We will see a lot of movement, and that would be a domino effect. Someone will start and everyone else will follow. And back to the article. As seen in the graph below, the volume of the crypto market experienced a large spike in late 2017 as the prices of cryptocurrencies peaked at all-time highs. But over the past few months, the volume of the crypto market has started to recover, after experiencing a dip in March and April. In July, the volume of Bitcoin declined to sub 500,000 Bitcoin, but since August, apart from the first week of September, the volume of the crypto market has generally been improving. And you can see that here, we see the lows here, and we can see generally higher numbers again here. Generally, crypto is still in its early phases of development, like the internet in 1994. Institutions are just preparing to get involved, and infrastructures of the market have only started to improve rapidly since mid-2017. As such, it is too early to discuss the possibility of crypto competing against reserve currencies and central banks. Tan stated that the next 18 months could be crucial for crypto, as it will define the long-term trajectory of the market, adding, and this is the quote, "Central banks are a whole other level, and I don't really know if and when they might decide it is something they will use as a reserve currency. That would be super far in the future in my sense. We need to go from the infrastructure phase to the application phase, and I think that is the main story for the next 18 months. It's still the internet in 1994. And the next paragraph. Mike Novogratz sees FOMO among institutions. In June, Novogratz stated that the crypto market will feel like a bubble once it reaches $20 trillion after experiencing a 100-fold increase from the current price range. At the time, he explained that the next rally of crypto will be fueled by institutions entering the crypto market, triggering fear of missing out among other institutional investors. Cryptocurrency is a global revolution. The internet bubble was only a US thing. I'm not so sure about that. It was rich US people participating. Cryptocurrency is global. There are kids in Bangladesh buying coins. It is monstrous in Tokyo, in South Korea, in China, in India, and in Russia. We've got a global market and a global mania. This will feel like a bubble when we are 20 trillion. Now, of course, questionable when and if we will reach 20 trillion. Over the past month, as Cointelegraph reported, Citigroup, Morgan Stanley, and Goldman Sachs, three of the largest investment banks in the US, have publicly released their plans to facilitate growing demand for Bitcoin from institutional investors. Morgan Stanley is said to have already established a system to process funds coming from the traditional finance sector into the crypto market, and is currently awaiting an internal procedure to launch its crypto custody. Novogratz stated, "It won't go there, 20 trillion, right away. What is going to happen is one of those intrepid pension funds, somebody who is a market leader, is going to say, you know what? We've got custody, Goldman Sachs is involved, and Bloomberg has an index I can track my performance against, and they're going to buy. And all of a sudden, the second guy buys. The same FOMO that you saw in retail will be demonstrated by institutional investors." Once again, I think this is generally a good point. I'm unsure about the 20 trillion number, but when institutional investors flow in, that will be the end of 2017, but bigger. because that was mostly private investors. That was just your friend from high school who heard about Bitcoin on the news and invested $500. When pension funds, when institutional investors, when large corporations let their money flow in there, that will be hundreds of millions, maybe billions at a time. That won't be your high school friend's $500 that they saved up in like behind their bed. So we will see crazy movement then. And to just read the end of the article here. The deployment of crypto custodian solutions by regulated financial institutions and strengthening infrastructure around crypto will increase the probability of institutional investors committing to cryptocurrencies, which may increase the chances of crypto market potentially achieving hundreds of trillions of dollars in valuation. Now, I am relatively agnostic on the idea of if we will ever or if we even can reach a $200 trillion market. Now, full disclosure, I am not well informed enough for that. I am not an expert, but also I'm very bullish on the crypto market. I think we have something that will change the flow of history here. But even as far as that goes, 200 trillion is still an awfully large number. Now, I think within the next 2 years, we will see tremendous growth. We will see all those investors flowing in. We will see billions and billions and billions and billions and billions of dollars flowing into crypto. We will probably crack a trillion relatively soon. We might be moving on to 10 trillion from there. I'm not sure about 20 trillion. I'm not sure about 200 trillion. I'm not saying they're impossible. I'm just not sure when or how or if we'll ever reach them. That is predicting a future where everything is about crypto. And I'm not sure that will happen. I think crypto will establish itself as one of the core pillars of finance. I think blockchain technology will be used everywhere, but a lot of it will probably be without tokens. And I think the future for crypto is incredibly bright. We will see so much movement. We will see more regulation coming in the coming months. We will see all these crypto products getting on the market for institutional investors. We will see xRapid going live next month. That is huge. That is absolutely enormous. That is probably the biggest news of the, aside from Bitcoin ETFs, that will be like the biggest news of the second half of 2018. And there's a lot going to happen. I'm agnostic on 200 trillion. I just have to say that. But even if we're just reaching 10 trillion, that is 50 times what we have right now. And 10 trillion is very much a very real and relatively immediate possibility. We were close to 1 trillion before, and 10 times growth is not at all unprecedented for the crypto markets. So I'm gonna be personally aiming for that. I'm hoping for that right now. I'm not precluding the possibility that we might reach 200 trillion at some point though. I'm keeping an open mind. I think anyone who tells you we will definitely reach 200 trillion, or anyone who tells you we will definitely reach 50 trillion, especially if they say by 2025 or something like that, I'm gonna be very, very wary of them. I think that is way bigger a statement than anyone can reasonably make, because you essentially have to lie about your assumptions to be saying that will definitely happen. There are too many things we do not know yet. There are too many unknowns. There are too many variables in play. Anyone who tells you they can definitely predict exactly what will happen and that a certain number will definitely be reached, they're not lying because they probably think that, but it's not a good analysis. Like, that is something I can definitely tell you. Anyone who tells you it will hit this number, definitely, no question about it. No. The world is too complex. The financial world is too complex. There are way too many question marks in our future. Even if everything that could go right goes right, those are potential scenarios. There are way too many variables in play to claim that you can accurately predict anything like that. And that's what the same thing I'm always saying about price predictions for individual coins. We can learn a lot by looking at a few different price predictions, especially if we're looking at how they were derived, and some predictions are definitely more valid than others. But you always have to keep in mind, no one can guarantee any of these things. You can make very good predictions about the near future based on existing trends and on knowledge you already have, but the further you're going into the future, the more complex situations get, the harder it is to make any accurate predictions. So take anything somebody tells you about stuff like this with a massive grain of salt. And that is what I'm going to end this video on. If you listen to me ramble for 25 minutes about this, then thank you very much. Do leave your opinions in the comments. I want to have a discussion about this kind of stuff. And thanks for watching. The link to this article is in the description, as well as my social media links and ways to support this channel if you would like. And make sure to subscribe if you want more videos like this. I do a daily news breakdown and a daily look at the markets, and a lot of other fun stuff. And thanks a lot for watching. I will be talking to you guys soon.